When do you think there's actual deflation happening? Well, if you look, when we took our first exposure to Bitcoin in 2015, it was $250, and traditional asset managers and others in the ETF space were making fun of that decision. And so we paid very close attention to the daily moves. And at the time, Greece was threatening to leave the European Union. And we were worried about, a relapse into the European sovereign debt crisis. Well, if you were watching Bitcoin very carefully back then, you saw it nudged up every time that there was a flare up around Greece. And that gave us confidence that Bitcoin might be a risk off asset as well as a risk on asset. And that was confirmed last year during the regional bank crisis, when regional banks imploded and Bitcoin went up 40 to 50%. So I think this recognition that, and I know I've pivoted here a little bit from that paper to the topic at hand, but I think that really this could be causing a little bit of a domino effect. I don't want to, I don't want to, create alarm or anything for, other governments, but I think that this idea that Bitcoin is an insurance policy is important and maybe behind some of the devaluations we're seeing out there. I think there is a global recession underway. You said it, and in the U.S., the technologies versus the economy. These are booming technologies. When you get technologically enabled innovation, it's highly deflationary. And we've got these 5 platforms. We haven't seen anything like this since the late 1800s, early 1900s. Telephone, electricity, internal combustion engine, deflationary period, right? And those were deflationary technologies. So we're seeing a lot of cross currents in the US. It's very confusing. In the employment report, you get non-farms. The companies there they've hit that level because of past success. And if the world is going to be disrupted and the traditional world order is going to be disintermediated, that's probably not the place to go. However, and we've been fighting this battle for 10 years, including Bitcoin, and we are providing exposures to the new innovation, the way the world is going to work. And what has happened, and it's unfortunate, I think it's the most massive misallocation of capital in history, is after the tech and telecom bust, and even more so after 08, 09, there was a move towards risk aversion or risk mitigation. And what did that mean to the traditional world? It meant, let me get close to my benchmark. Let me get close to the S&P 500. Let me get close to the NASDAQ. In fact, this is the internet financial system. This is what the developers did not put in place in the late 80s, early 90s, as they were evolving the internet, because they never thought the financial services or commerce would take place on this thing that we're all using now. So I think stepping back and talking about it that way, and then also describing, how young people are behaving. Even the most seasoned investors out there, they have children or grandchildren, and they're looking at how they spend their time, and they know that more than half of their leisure time or discretionary time is spent online. And so this notion of social status moving online with these immutable digital apps. And why is this? They wanted to see who the survivors were going to be. They do not want to put their clients' money into a fund that will ultimately shut down. So I think that is becoming clear, although you will have each one of the bottom 6 or 7 saying, no, you have to give us until this happens in the case of Invesco, I guess it's the wealth managers. We have not had our primary clients buy into this yet. They're doing due diligence on a lot of things, critically on infrastructure and ops. And of course, that's Ophelia's 21 shares bailiwick. And they've, the great thing for us, and one of the reasons we wanted to partner with them is they have been battle testing the infrastructure and ops for the last 5 years over what now is roughly 45, 46 offerings, different funds, right? Through booms, busts, through not a good analogy.
But if you look at like European markets, for example, right, you'll get maybe, depends on the product line, depends on the issuer, but maybe anywhere from like 50% the size kind of range, somewhere in there.
Nice. One of the
So
things, sorry, just in terms of sizing the opportunity, which is, we spend a lot of time doing that. In Bitcoin, you're talking about a global monetary system. You're talking about a technology, and you're talking about store of value. And we think ultimately it will play all three roles of money. So, and a new asset class. So you've got three major. So monetary system, technology, new asset class. The Ethereum, I mean, some people will say maybe it will be a currency, but it will not be ever. What has just happened, the green light from the SEC, we believe will cause the institutional participation to move towards the bull end of our set of assumptions, which was closer to the 5% asset allocation to Bitcoin over time. So we think that probability has gone up. So the probability of the bull case, the 1.5 million, has gone up.
Nice. What do you both think is the likelihood that we'll get something like beyond Bitcoin and ETH, Solana, Avalanche, whatever you want to, other assets you want to throw in there? I don't want to pick any names, but what is the likelihood that we get some of these ETFs in 2024? What is the likelihood we get some of these ETFs in 2025? I would assume it's slim to none in 24, but actually
line for the ETH approval, and I think the probability is probably going down. Do you agree with that? Because one of the telltale signs for Bitcoin that something was going to happen with the spot Bitcoin ETF was the fact that we were communicating with the SEC. And unless Ophelia knows something I don't know, I just think that the SEC is still biding its time, maybe studying the issues from what we can tell.
I think the one thing that gives me some hope here, and I think I'm less bearish on this than others, is that there's not a lot of differences between these filings